Hey, what's going on, guys? Welcome back to another YouTube video. So today we're doing another trade breakdown of the month, and this month's trade of the month, well, not this month's by the time you guys are seeing this, but October's trade of the month was a really nice US oil trade. So the first position on US oil banked a total of 13% with 1% risk. So I want to share that trade with you guys, break it all down, show you guys why I took the trade, how I entered, how I set my targets, and break everything down for you guys. But before we jump into the video, guys, I just want to say there's a lot of scam accounts going around impersonating to be me. Okay, my only account is this YouTube channel as well as my Instagram, which is aaron.trades. So if you see any other accounts with pictures of me apart from aaron.trades on Instagram, then it's not me. Don't get scammed by these people who are trying to take your money. So guys, let's jump right in and break down this fantastic US oil trade. So guys, taking a look on the chart at US oil. So this is the first entry I took on oil, which was taken on the 26th of October and hit my target by 2 days later. So I was expecting this to be more of a big swing trade. However, price moved down in my favor much quicker than I anticipated, which, to be honest, I'm certainly not complaining about. Banking 13% in just under 2 days. Reasons for taking this trade, guys. On higher time frames, I noticed that US oil had been in this big uptrend since back in April 2020, and we were coming into a very key monthly level of previous support. As you guys can see, look, support, little fake out, support. You guys can see, look how well these bodies tried to push back down, but look how they closed back above this key level. Okay, that's no coincidence. The sellers were not strong enough to close this below this very key level of 85. And once we had broke, we typically come back up to the retest before then pushing back down lower. So on higher time frame, I had found this very key level of resistance where price was in a very key area where we could see pullbacks before then potentially pushing higher. So that was my monthly time frame confirmation. Worked my way down to the daily, and I noticed this very key resistance trend line coming up along here. And what I simply did is I waited for price to come into this 1, 2, 3, have that third drives, tap into our very key level of $85 before then pushing down. Okay, so I didn't jump in shorts right here, okay, because when we're around this region, there's nothing to say that we are just going to push up, as we are in an uptrend, break and retest and just push higher. So what I simply did was I waited for the rejection of the third drive into these highs, as well as the rejection of this $85 region before then looking to jump in short. So lower time frame, let's go back to the lower time frame chart and take a look at what we can see. So let me just hide this one, because this is one I am now running again. So let's hide this completely. So it was around this region where I was looking for the bears to step in to confirm that this was going to have the move back down. Rather than what a lot of retail traders do is they'll see this point of interest and they'll try take that, they'll try catch the top. Whereas for me, I prefer to see a nice rejection, a big push down to confirm what I'm anticipating, and then look for the retracement and then catch that move back down. However, what most retail traders do is they see this rejection, they think they have to jump in here because they're just going to miss the move. However, if you jump in shorts here, structurally, look, we're in an uptrend, we're breaking highs. This could have easily just retraced and continued to push higher. So jumping in shorts here is very risky. Remember, the markets don't move as quick as you think. If you're anticipating shorts from around these regions to come down into these levels, we're not just going to drop, we're going to have retracements, and the retracements are where you want to look to get involved. Because once we've had that aggressive push down, then the entry to go short in the retracement is more confirmed. So we saw that very nice rejection. We were looking for this push back up to then go short. So what I did was I had a Fibonacci on like this, and I also had this level of resistance like this. Let me just replay so we can actually properly see what's going on here. Okay, and I personally didn't jump in shorts here. This was a very nice break, retest level to go short. However, I'm trying to catch a bigger move, so I want to see a deeper retracement, catch retails off on the wrong side before then push them back down. Okay, so the reason I personally didn't short here is because I expected and anticipated that we were going to come up and tap into this sort of head and shoulders formation. It's not the cleanest, however, it's still very much bad. You got the left shoulder, you got the head. Want to see price come back up and retest this right shoulder before then dropping lower. So that's the reason I didn't short the break and retest of this level here, is I expected probably a lot of retail traders would have shorted maybe here, stops just above. So they got stop hunted before then price pushed back down in our favor. So what I had is I had this level of resistance, this head and shoulders formation, as well as this Fibonacci. So you can see I've got my two key levels here, 71 and the 78%, where it was a very, very key short sniper zone for me to want to get involved with US oil. So that's where I then took my short position. I had a stop, 30 pip stop loss. Stops was just above the 78. As if we were going to push higher, then I simply would have just looked to re-enter off the 88 and caught an even bigger risk to reward. And that's what you kind of have to accept with trading. Risk management is very, very key. As long as you stick to your plan and you keep your emotions in check, you could take a 1% loss, but if you get the right price action and price pushes up that little bit further, don't be emotional because you've just taken a loss. Stick to your plan. And if the price action is there for you to look to get involved back in the position, then do so, and you can catch an even bigger risk reward, and you can recoup that 1% loss very, very quickly. However, we saw very, very nice rejections of this key area, and that's exactly what I wanted to see. Price was bullish up until this point. Okay, I went short here, and what I wanted to see in the following candles was indecisiveness or bearish candles to show me that price is stalling around this region, to give me an indication that we're not going to break higher, and we are respecting this level to then push lower. So that's exactly what we saw. And then it was followed by a very, very nice push down. Okay. And on the 4-hour time frame, we had a very, very strong push up, big 4-hour close, and then we started to see this pull back down. Okay. And we just replay down to where we were. Okay, perfect. And my targets were set at this level of support. And what I explained to the private community members is, but if gold's going to have another push back up and another run up to the highs, then I expect that we're going to come down and take out this level of support, grab the liquidity needed to then push higher. Imagine some people would have probably had longs from around this region, stops just below. So look, price wicked down, took them out before then seeing an aggressive push back up. So profit targets there were very, very key and very, very precise. And as you guys can see, we wicked out this previous low, this level of support, this double bottom, before then pushing higher. I personally don't like to trade double bottoms or double tops just because they're very, very basic retail trader patterns. And the majority of the time, what you'll see is whenever you do see double tops or double bottoms, retail traders enter off that second touch with stops just below. And a lot of the time, what you'll see is if you have this level of resistance like this and you're looking to go short, what you'll see a lot of the time is you'll see this rejection, you'll see price come back and retest, where retails will then go short. They'll put their stops just above this high. We'll have a push back down. We'll likely then take them out, and then we'll have that move back down. And that's the reason I don't like trading double tops or double bottoms. Exactly the same with a double bottom. We'll create the support. Most of the time, what we do is, like we had in this situation, we'll come down, we'll wick out the previous level of support, and then we'll have that move back up. So very, very nice targets on this region. Price tapped into this point very, very well, and this banked a total of 13% on that one position alone. So a really, really nice trade, very, very well managed. There was no real reason to look to close this early. You guys can see, look, we had this level again, look, support, broke above, broke back below, retest, another short position there would have been very, very nice, and then a good strong push down. So almost 400 pips on that move, banking a total of 13%, of course, with 1% risk. If you guys trade 2% risk, then would have been a 26% trade. I actually fully broke this trade down before I entered, when we were trading around these regions, to the private community member on the weekly call, that I expected if US oil is going to have a push back up, then we're going to come down and take out this level of support. So community members were very aware of this position. I also shared this exact entry stop loss targets with them as well. So they were all lucky enough to bank off this position. And although I've just taken this in the new month, I took this position yesterday, I'm still happy to share it with you guys and just kind of break down my ideas of going into this position as well. So again, this position was shared with a private community, but I also actually shared this position in my free Telegram group. So you can find all the links to the community Telegram group all below in the description. And we have this position currently running at a nice 5.7%. So 13 there, 5.7, total of 18.7% on US oil in the past just under a week, which is really, really nice. US oil is actually really, really nice to trade. I think a lot of retail traders neglect US oil, but it's a fantastic one to trade. So reason for shorting, again, very, very simple, just a level of resistance. in order for us to have a valid level of support and resistance, it needs to be tested at least twice. Okay, so this is where I had this zone. Looking for price to come back up, retest again, reject before then looking to go short. So lower time frames, I had this drawn on like this. So we had this 1, 2, 3, third drives into the highs again. Started to see that really, really nice rejection and then followed by a nice impulse back down. Okay, now once I took this entry, as we were coming into a level of support here, I put my stops to break even because this is a very, very key level of support where we could broke, retest, and then just pushed higher. This would also be a fantastic place for you to look to hedge your position and go long, because we could have easily break, retest, and just pushed up higher. What you'll see a lot of time with retail traders is they'll get involved with shorts here. Price will break up, price will retest, and then it will push higher, and they'll get stopped out, and they'll get frustrated with themselves. Whereas what you need to be doing, what you need to be doing is anchoring yourself and hedging yourself to both sides of the markets. Okay, so you go short, you see a level of support. What do you do at support? You just simply go long. So you go short here. As we are at a very key level of support where price could push up, you put your stops to break even. Okay, so if price is going to push up, then your shorts get stopped to break even and your longs run into profit. Okay, so really nice rejection, pushed up. If you did go long here after that bullish push, then you'd want to have your stops to break even. And as you guys can see, price broke this level of support, came back up for that retest. Very, very simple. Another entry there would have been absolutely fantastic. And then pushing back down, retesting again, and still pushing back down. So very, very nice 4-hour candle closures. Very, very bearish. Looking for this one to actually potentially come down and do exactly what we did in this scenario here. Okay, so we have this level of support here where I personally think oil has the potential to come down and take this level out before then pushing higher. So that'll be my overall targets. However, running at 5% profit right now, stops already at break even, may even look to secure some profits soon. But as it stands, look, price is breaking, retesting trend lines. So there's no real reason to close this. If you find that you're closing your trades too early, then just look at the price action. Like in this example here, there was no reason for me to look to secure profits early or close this trade early, as the price action was very, very bearish. And if I had closed this position early, that would have simply been off emotions. And I think what a lot of retail traders do, well, what you need to do is your winners have to outweigh your losses. And if you're closing your winners too early, then that's never going to happen. I think what a lot of retail traders do is they may take a few losses. Let's say they take a 3% loss. Okay, that's right. They take 3 losses in a row. So they're minus 3%. They take one trade and that trade is up 3%. And then they start thinking to themselves, oh, well, I better close this because that will cover my losses. Okay. If you want to be a successful trader, you shouldn't be looking to just cover your losses. You want to be massively outweighing your losses. The only way you're going to do that is by simply letting your trades run into good profits and not being too emotional about what's happened in the past. So many traders, myself included in the beginning, I would take losses, I would see good profit, and then I'd be like, okay, this will cover the losses. I'm just going to close it. And then you're pretty much back to square one. You then start taking more losses again. You then recoup the losses. You get back to break even, and you're just within that cycle. What you need to be doing is holding onto your winners, like I say, letting them run, and that's how you're going to become more of a profitable trader. That is US oil at the minute. When we go into higher timeframes on US oil, what I think is very, very possible is, look, guys, look, resistance, 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 broken, could easily come back down, test that as support before then pushing higher. So if we look to target around that 77 region, which I very may well do so if the price action is right, then we could be looking at a 19% trade here. So 13% there, 19% there, 2 absolutely fantastic positions. And as you guys can see, this actually lines up with, and this is a pretty big call on USOIL. This actually lines up with this level right here as well. Look, where price broke, never came quite back down to retest this level. So who knows, could price come back all the way back down, retest these levels before pushing higher? It's looking very, very likely. Okay, October was a really, really nice month. Summer months were pretty quiet. October was a fantastic month. Ended the month with a total of 18%. All trades broken down and shared within the community. So guys, if you want to find any more details out about myself, trades, what I do in the community, then all the links can be found in the description, and you can start banking some of these fantastic trades alone. I know a lot of people who are looking to get funded. This trade alone was 13%. You would have passed an FTMO challenge with this trade alone. So I hope you guys enjoyed this trade breakdown. Very, very simple elements, guys. Please do backtest and trade oil a lot more. It's very, very simple. It can move really, really clean with just very simple elements, breaks and retest. Usually my strategy is a lot more advanced than this. Well, most FX pairs. However, with oil, this is literally as simple as it needs to be. So I hope you guys enjoyed this video. Please do like, subscribe, leave a comment, and I'll be sure to get back to all of you. And I hope you guys have a fantastic trading week and a good day. Talk to you all soon. Thank you.